Hey guys, welcome back to my channel. My name is Joe. Today is March the 11th. On the journey to 250,000, I am at currently 148,289, up by about 4.15%, which is about 5,800 for the day. For the week, up by about 9.48%, which is about 12,800. For the month, down by about 14.51%, which translates to 25,171. 3 month up by about 14.74, which is about 19,000. And for the year, up by about 67.71%, which is about 59,800. So I have Tattoo Chef in my watch list, and I've started building my position. I'll talk a little bit about the company. They just had earnings yesterday, which were pretty decent. I will cover and highlight on what they said and kind of give you my reasoning why I added this company in my watch list. So how I like seeing investment as is right now, if you're able to buy a stock in a company you believe in, give it like 5 years and you'll be really impressed that you made that decision. So that's kind of what I usually tell beginners in the investing journey. Just don't think too much. Make sure that the company's fundamentals make sense, and then just put in some money and just forget about it if you're not actively trading. But in several years, when you look back, you'll find the value has gone up because if the company is making money and everything that they're doing makes sense for the future, then you should be fine. So a quick reminder, we're growing this channel real fast. Subscribe to the channel so that you can support us grow even further, and also give this video a thumbs up if you like the content of the video, and also comment down below. Let me know if you have Tattoo Chef in your portfolio or in your watch list. So let's talk about the company. So Tattoo Chef, ticker symbol TTCF, currently at 20.94, down by about 1.47%. For the week, up by about 10.81%, which is about $2. For the month, down by about 15.64%, which is about $3.9. For 3 months, it's up by about 21.41%, which is about $3.71. For the year, up by about 104.07%, which is about $10.69. So currently my position is 50 shares. So as I've walked through my other portfolios, I've mentioned that I like having at least 100 shares so that I can do some option trading with that. So I'm hoping to build up my position to 100 shares soon. Average cost currently is 19.29. I'm up by about 9.51%. You can see the volume is about 805,000. It's not a lot, but it's pretty decent. This is a space that has a lot of competitors, but if you believe the future is about eating healthy and also just plant-based foods, I think you're in the right spot. Our market cap is 1.7 billion, so anything about a billion is always good for me when I'm looking into stocks. If it's not penny stocks, just for stocks that may grow in the future. We can see the 52-week high is about 28.64, and then we had an open of 20.80 and a high of 21.47. So let's see in the news what they have. So they did mention that they were going to add 6 products to Target, and you can imagine it's kind of interesting to see this brand that you are buying shares in Walmart, Target. You can see it in Costco, because I did buy some of the organic greens there, and I wanted to try. I haven't tried them yet, but I'll try and let you guys know. So let's kind of talk about the earnings and also just a little bit about what the company is. I'll pull up Yahoo Finance and talk a little bit about the earnings, but let's talk about the company. Tattoo Chef Inc. manufactures prepared food. The company is headquartered in Cincinnati, Ohio. The listed name for TTCF is Tattoo Chef Inc. Class A common stocks. Number of employees isn't accurate, so I wouldn't bank on what Robinhood says. So let's go to Yahoo Finance. This was just written yesterday, and I'll just touch on some highlights. So financial highlights for the fourth quarter of 2020 compared to the fourth quarter of 2019. So revenue was up by about 48%, which was 39.6 million, compared to 26.8 million in the prior year period. The Two Chef branded product revenue was a record 23.9 million, an increase of 172% compared to 8.8 million in the prior year. Net income was 41.5 million compared to the net income of 2.2 million in the prior year. Current period net income included a one-time tax benefit resulting from the company's change from an S Corp to a C Corp at the time of reverse merger in October 2020. The restructuring in anticipation of the merger caused a step up in tax basis of intangible assets, creating a deferred tax asset and a tax benefit of 39.3 million. So adjusted EBITDA was 3.7 million or 9% of revenue compared to 2.2 million or 8% of revenue in the prior year period. So let's check also financial highlights for full year 2020 compared to full year 2019. So revenue was up by about 75%. So it was 148.5 million compared to 84.9 million in the previous period. So Tattoo Chef branded product revenue was a record 84.6 million, a 363% increase compared to 18.3 million in the prior year. Net income was 45.4 million compared to 5.6 million the prior year. Tax benefit noted for the fourth quarter had the same impact on the full year net income. Adjusted EBITDA was 9.6 million or 6% of revenue compared to 6.9 million or 8% of revenue in the prior year. So where do I see this company headed to, and what are the pros and cons and things affecting this company? So the food industry is a little bit tricky. Margins are always not as good, but I see what they've been able to report, that they're able to get some really decent margins on their own brand. They do also do private label, whereby you can have another company have their own brand, but it's your own product, like Trader Joe's and the like. So that segment isn't really growing as much, but I think them pushing their own brand is a really good thing, so that people kind of get used to the brand when they go to the stores and kind of have people embrace it, and that makes the company even have good revenues. So the future of plant-based foods, I think, is very solid. Most people are preferring to eat organic food currently, just for healthy lifestyle. And also right now we don't have a lot of land to cultivate like greens and all that, so people are getting smarter in how they grow greens in a very economical way, whereby they don't produce a lot of emissions, as well as they are able to have them be not exposed to pesticides and various elements that may harm the nutrients and food in general. So I think the future is bright, but you also have to remember that the cons are like there's a lot of competitions, the margins might slim, they might need to use a lot of money to advertise, maybe provide coupons to folks so that they can try the food, get used to the taste or something like that, just to get a market share. So those are the major things that I see affecting the company. But in the long term, I think in the next 5 years you'll look back and see $20 was a really good deal. And let me know in the comments section what do you think about this company, if we agree on the future of the company or if you differ. Let's discuss there. Thank you so much for reaching this far. I really appreciate it. Be green, be safe. See you on the next one. Bye.